We at Great Lakes Hybrids have been serving generations of farmers with outstanding service, the latest technology, and new yield producing proprietary genetics. We're happy to partner with Farms.com Risk Management to bring you this latest market update.
Welcome to the Farms.com Risk Management Daily Market Commentary for November 23rd, 2011. Well, we got a USDA cold storage report that was released late afternoon yesterday, and numbers came in better than expected, so a nicely bullish surprise. Despite all this negative news that we continue to hear from both the U.S. and Europe on their debt issues, let's go through some of the quick numbers here. So there's the chart there. The pink or magenta is 2011. It really just doing the usual drawdown of stocks for the holiday season. Nothing big here, but was lower than expectations. Pork came in at 2% lower than last year, and this was much better than what traders were expecting at 506 million. So the number came in at 490 million. And then pork bellies also came in at 8.611 million pounds. This was 0.389 million less than markets were expecting. So probably signaling that a lot of the traders don't want to hold expensive bacon in freezers, they'd rather just sell them into the market. We got beef about even versus last year, and chicken down about 5%, probably in line with some of the reduction that the chicken industry is experiencing here because of some financial distress. We got the beef numbers at 414 million pounds, was actually lower than what the market was expecting, also at 426 million pounds. So this report really doesn't change our view about livestock futures. This will be viewed by futures as positive, as bullish. However, the markets have been moving higher here in the last few days. You can see this December hog daily futures chart was up about 3.5%, so probably largely factored in. Today, unfortunately, we got more news, economic news, and news out of Europe and the US that are pressuring commodities across the board. We got a purchasing managers index from China that is below 50 again. The last time we saw this was September. This is a new 32-month low, or a low not seen since March of 2009. Again, the markets are suggesting a hard landing. We disagree. I think it's more of a soft landing than hard landing. China will be the bright spot in the emerging markets arena. U.S. still be the economy worth noting in terms of engine growth for Western world as well. On top of that, we had a German bond auction that didn't go too well, and then we've got the PMI for Europe also down for the month of October. So you put it all together, and we got U.S. Thanksgiving holiday. We got markets closed tomorrow, and many probably just decided to sell as we move into that long weekend. June hog daily futures chart, still no change in our bullish sentiment for next year. I think the fundamentals, both supply and demand, will propel futures about 10 to 15% higher. 110 target for next June. Same thing with live cattle, 140 target next. We're within that late spring, and then August 2012 price target for feeder cattle in the 170 per carcass range. So, in other news, we got U.S. consumer sentiment up to 64.1 for October. That's higher than what it was in September, so that's good news on the consumer front for the U.S. economy. The 12 members of the U.S. Super Committee, their failure to reduce the budget deficit by 1.2 trillion could shave as much as 0.8% in GDP in 2012 if the unemployment benefits and the tax payroll cuts don't get done by December 31st. We're hopeful that perhaps something gets resolved between now and Christmas. Here's that grains are down again today, unfortunately. We've been mentioning here for the last few weeks that if corn could not hold $6 a bushel support, we'd probably retest the low seen on October 4th at 587 3/4. Today we close at 588.5. Next support comes in at 550. Unfortunately, this has nothing to do with fundamentals, but these are the types of events that we try to avoid selling into that fall-winter months. We hope that, when you look at this chart, you're selling up in the upper end of that range in that late summer. We had suggested a lot of recommendations and hanging orders for the farmer to take advantage of that. So we're hopeful that maybe we might still get a year-end rally. We'll do a daily next week on whether there's a Santa Claus rally. We've mentioned it before in past reports. Corn may come back to that 6.25, 6.50 on a dead cat bounce as we end the end of 2011. Markets are becoming very, very pessimistic and oversold, really overreacting to a lot of this news. But that negative psychology is going to be tough to change here short term because we just don't have enough time. Markets not happy that these policymakers are not doing things fast enough for them. Here's the January soybean futures daily chart. You can see now testing the 1120 support. Next support comes in 1120. There's a gap going all the way back to 2009 that the market needs to fill. Again, perhaps beans could come back as a year-end rally back to that 12.25, 12.50. Taking canola down with it. Now testing 500. Canola could bounce back to that maybe that 5.25, 5.30 per metric ton by the end of the year. JP Morgan reducing, downgrading commodities overall for the next 6 months because of the lack of policies that the governments are doing in both Europe and the United States, are creating dark clouds over commodities for the next 6 months. We agree with that forecast, but we're hopeful that perhaps things will change sooner rather than later. Jim Rogers, he's a renowned, commodities investor, suggesting that the collapse in commodity prices, particularly the grains, rice, corn, really has more to do with MF Global's bankruptcy at the end of October. And it's similar to the situation in 2008 recession when AIG and Lehman Brothers went under. But in 2008, and we're going to do a daily on this particular situation, but in 2008, commodity prices, grain, particularly if we pick on corn, fell by 50%, but it took over 2.5 years to come back up 60%. So we hope that that's not the situation, but we'll give you some details on that next week. And then we got John Deere profit up because, well, U.S. farmers are flush with cash, so they're buying a lot more tractors and combines for next year. CME Group now guaranteeing $550 million so that they can return 75% of customer cash to former MF Global customers. This is big news. CME has to do this in order to regain that confidence. Essentially what happened with MF Global is they invested in some sovereign debt in Europe. Something went wrong. They need to keep their customer accounts separate, but somebody started dipping in customer accounts perhaps because they needed capital to fund something that went wrong here, and the controls weren't in place, and now they're suggesting that 1.2 billion is missing. CME denying that those reports are correct, and so the saga continues, the drama continues. Happy Thanksgiving to all our U.S. watchers and customers. Hope it's a safe one. Till next time, thanks for watching. Tomorrow there will be no daily because of that U.S. holiday. Markets will reopen Friday, close early at noon Central, reopen on Monday, November 28th. Take care.